Good afternoon, everyone. Thank you for joining us for today's Lunch and Learn. I'm Lauren Smith with the International Franchise Association, and we have a great 30 minutes lined up for you. Before we begin, I would like to remind everyone that we are recording today's webinar and will make it available later this evening on community.franchise.org. If you have any questions for today's speakers, please add them to the chat box and they will be addressed toward the end. Today's topic is Unlocking the SBA Puzzle, Why Your Loan Didn't Close and How to Fix It, and it is brought to us by Benetrends. Here to provide today's discussion is Reg Byrd, President of SBA and Bank Financing at Benetrends, and Robin Washienko, SBA National Sales Director and Senior Vice President at the Huntington Bank. Thank you all for joining us today, and thank you to Benetrends for sponsoring today's Lunch and Learn. I'll go ahead and turn things over to you.
Thank you, Lauren. I'd like to start, first of all, by thanking Robin Washienko for joining us today for this Lunch and Learn. Robin and our team work very, very closely together, and I think we have some pretty important information that we can share. So I'll start off by just sharing a little bit about the current state of SBA loans, that being just a couple statistics here. It's interesting to see how we compare in 2023 to 2022. In 2022, there were $34.9 billion worth of loans that were approved by the SBA. 56,932 loans. In 23, it was a little bit of a shift. It was actually about $1 billion down from 22 at 33.9 billion. And then the loan count, though, went up. The loan count went to 63,286. So that's a difference of about almost $6,400 loans, 6,400 loans that went up from last year. So it's interesting to watch the trends year over year. Going into next year, I think, and Robin and I talked about this earlier. Robin, you might want to share your thoughts as well. But we tend to think that going into next year, it's going to pretty much mirror what we've seen going on this year. There might be a slight decline just based on economy, a year of presidential election, and just a lot of different things that are going on that could cause it to maybe go down a little bit. But that's where we are at this point. Robin, anything to share on that?
I just think it's amazing that the SBA is supporting Main Street USA with the sheer number of clients that we've helped achieve their dreams. And I think that that's really important. While the dollar amounts may fluctuate a little up or down, it's the sheer number of clients that we've been able to service that makes Huntington Bank particularly proud, as we are awaiting the 2023 numbers for who the number one lenders will be as far as dollars and units, as we feel pretty confident that our position in units will hold through in 2020 for fiscal 2023.
I'm confident Huntington's going to be right on top. I think you've got nothing to worry about. So let's go ahead and move on here. I'm in charge today of the slides. So I offered already current state of SBA loans. Robin, you want to touch on recent changes in SBA policies?
Sure. We've all been moving through the new SOP and changes that are occurring quickly. I think for the franchise space, it's really important that small loans are now up to 500,000. Why is this important? Several of the banks are not including collateral coverage in the loans up to 500,000. In addition to that, the guarantee fee changed as of 10/1. There's no SBA guarantee fee for loans under $1 million. Again, that theme of Main Street USA and Main Street lending are coming through with the SBA changes in small loans and guarantee fees, no guarantee fees up to $1 million. In addition, the SBA also streamlined their equity injection and sourcing, and each bank is digesting that as well and moving through. But it is a much kinder, gentler SBA as we move into 2023.
Robin, I'm gonna jump in real quick if you don't mind. I'm sorry to interrupt. When you talk about streamlining equity injections and sourcing, for those out there that don't speak bank or sleep bank like some of us do, can you elaborate a little bit on that, please?
Sure. The mantra is do what you do as a bank, and so we're able to really take a look at how many months of bank statements do we need to know, where the money is coming from. It's really important that we're doing our due diligence and following the money trail, but maybe we're not going back 3, 6, 9, 12 months as we may have been in the past, where we're looking at more recent deposits and taking a hold of the equity injection and sourcing where those funds came from.
Okay, that helps a lot. Thank you. And on the guarantee fee, I think that at the level of about a $2 million loan, that's definitely not the average loan out there. But for those that do reach that amount, I think that there's a savings of up to right around $25,000 or so. Isn't that right about where it is, Robin?
I think 2 million and over, it's the same year over year, and under $2 million, the guarantee fee changes by dollar amount.
Right.
So definitely the SBA is moved forward with a small loan concept to make sure that we're helping customers achieve their dreams.
Right. Okay, a little bit on market trends. I know, Robin, you want to share a little bit there from, before you do, I'm going to just jump in and from where we sit at Benetrends Financial, the market trends that we're seeing are, people talk about the interest rate increasing and that kind of thing. The trends that we're seeing are that if somebody is determined to make their dream come true of being a business owner, they're going to move forward. They're going to move forward and seeing what they can do about getting financing. The good thing to know about the interest rate is that when it does come down, the rate will go down on your loan. But our volume and what we're doing has really been either status quo or actually has increased over time. The loan amount might be a little bit smaller, but the trends that we're seeing is that nothing is slowing down from where we sit. So wonderful opportunities. Robin, turn it back to you there. Sorry about that.
I agree 100%. And we discussed the year over year trends for 23 and the forecast for 24. We're waiting for IFA to come out with their 24 forecast. But we feel that there will still be robust lending in the franchise space in 2024.
Yeah. A little bit about banking relationships. So important. The theme of today's presentation is unlocking the SBA puzzle. If your loan didn't close, how to fix it. Banking relationships is a huge part of how we're getting financing place for our clients. And we've had banking relationships with some of our lenders for 20 years or so. And it might not be with the same bank because sometimes people will move from one bank to the other, but we stick with that person as they move around. And having relationships is really a huge benefit in being able to get loans done. Sometimes people will ask me, well, why don't I just go get my own loan? Why do I need Benetrends? Well, this is one of the big reasons. You walk into a bank down the street and you try to get an SBA loan, not really knowing what you're talking about and how to go through the process with the banker and speak the bank language can really cause a lot of frustration. And that's one of the reasons why we're here, is to be able to help folks bypass all of that, because we have such incredible relationships with lenders like Robin, for example, in Huntington Bank.
Great, and we love our partnership with Benetrends. So thank you very much, Reg.
We'll jump over here to overcoming some of the hurdles. And I think, Robin, this is something that you likely deal with, or your team deals with pretty much on a daily basis, as we do, but in a very different way. So if you'd like to highlight some things here, that would be wonderful.
Sure. I want to start just by making sure that we understand that an SBA loan is really access to capital for startup lending. And so when we're looking at the challenges, we're looking at how do we get the money out into the street quickly, and so that our customers can achieve their dreams. And so what can you do as you're determining how I move forward? I would think number one is failure to prepare personally, making sure that you understand your credit score, explaining any issues that might have been in the past, such as a bankruptcy or a late pay on a mortgage or something that happened in the past. I think all banks can handle an imperfect situation with a great explanation. We are, to some extent, storybook lenders. So explaining the numbers is critical. I think being prepared from a savings perspective, you do have to have capital to get capital. And that is something that the bank isn't going to fund everything that you need, that there is a piece of this that does have to come from you personally. So making sure that your house is in order, that your savings is in order, that you've paid off any extraneous debt that you can afford to pay off, that you've really taken a look at your credit score, understood why it's where it is, and explained any situations you have, will really help you move forward in the lending process.
When you talk about savings and having capital and for your injection and or post-closing liquidity and that kind of thing is really what the savings is referencing. I go back to my grandfather telling me when I was a young man buying my first car, he helped me and he said, you've got to have money to get money. And one of the other things he used to tell me is use other people's money. Always hang on to your personal, these weren't his words then, but hang on to your personal liquidity. Keep your personal balance sheet strong. So something to keep in mind there. Use other people's money and you need money to get money.
I think that's critical. And you mentioned post liquidity. That's so important because if things don't go quite to your projections or something happens or you lose a key employee, having savings to help weather that storm or that hiccup or that longer ramp up time becomes really critical. Also, having access to potentially a line of credit to support your business in a struggling time can really help you. So access to capital becomes that critical piece, both personal access and from your bank or loan partner.
Right.
I go into insufficient documentation, having complete paperwork. This is a government background. Every I is dotted, every T is crossed, every box is checked. So there's many times that there is rework involved where we have to go back and say, on question 17, I need the box checked yes or no and initialed to the right. Those are critical pieces that you may have missed. So importance of comprehensive paperwork. I would also state paperwork from a personal side as we're heading into October 15th, the last absolute deadline for filing 2022 tax returns.
Mm-hmm.
Is if you're asking us to make a loan decision from essentially 18 plus months ago, is that really a fair assessment? So things like getting your tax returns done and having your financial house in order and your paperwork in order really will move you through the process quickly.
Really good point. Insufficient documentation. This is something that we work with quite a bit with our clients. We've recently invested in a software platform that banks actually use for the document collection process. It's extremely efficient. It provides a portal to our clients that when open, you have a complete list of all of the documents that are necessary for us to build the perfect file for presentation to Robin and her team, for example, and making sure that, Robin, you mentioned dotting I's, crossing T's. It's a government-backed loan. We have a couple people on our team who actually used to work for national lenders behind the curtain, doing administrative work and packaging loans. And so I'll tell folks that I'm talking to that are prospective clients or clients we're working with that we have real I dotters and T crossers on our staff. And that too is something that can be extremely helpful to someone who's not been through this before.
I would also say that business plan and feasibility, don't shortchange this. This just isn't just an exercise to check a box. This is really your roadmap for how you're going to open your business, and you'll work with your franchisor to create. But you should challenge your franchisor. You should ask questions. What about my location? What about my territory? do I have enough money? Is it in the right places? Are my projections solid? Do we feel that they're achievable? And I usually even say go as far as to do a good, better, best on projections. Now, I wouldn't go super pessimistic and turn that into the bank, because you could definitely harm your access to capital. I always say, give me realistic projections. What do you honestly think is going to happen? And if that turns into a no loan decision, let's talk about it, because I think, again, access to capital, but you're repaying this loan. And so those projections and those sources and uses of capital become critical to achieving your success. So don't treat it as a check mark. Really think about what are you doing, and does this make sense for you personally, for you, your family?
You know, the business plan and feasibility it's an interesting part of this process. You know, like you said, Robin, don't just check a box. We struggle a great deal with some of our clients when they're building their own business plan and putting their own feasibility together, their own projections. You know, there might be someone who turns in a 3-year projection model, and the first year they say they're going to do $1 million. Well, they might do $1 million, but if we look at item 19 in the franchise disclosure document, that's showing us that the first year that the franchisee is in business, they're likely going to run around 600, 700,000. So if we were to turn in a projection for the first year at $1 million, when we know darn well that item 19 in the FDD states 600 to 700,000, that'll be kicked right back to us. Robin will look at that, or her team will look at that and say, no, this isn't going to work. We need this financial model redone. One of the things at Benetrends that sets us apart from other funding companies that are out there and that we're very, very proud of is that we've been writing, I should say, developing business plans for over 20 years now. This is our wheelhouse. This is what we do extremely well, and we help our clients with. For those clients who want to write their own business plan and build their own financial model, that's just fine. We're here to coach and guide them on what needs to be in there to make sure that the business plan, the financial model are absolutely perfect for the lender. I think that's twice now that I've said something about being perfect for the lender. That is always our objective in what we do when we present a file to a bank.
So you've gotten your personal house in order. You've done a job on your business plan and your projections. You've addressed any issues that you may have had in the past and tell us the story that your numbers tell. And then your loan is approved and we're working through closing. I will tell you the number one hurdle that we have to overcome post-approval is the least cost expense and projected cost challenges. So if the FDD was last created, and that's the franchise development document that you receive from the franchisor, was created a year ago, and we're hitting 12% inflation, those numbers might be underserved or undervalued. And so as you go and get your final projection cost and you come up with your lease of where you're going to go into your space, and those are significantly higher than what you initially had thought or sources and uses and project plan, that will impact your loan. Something has to happen at that point in time because your loan amount likely has to go up. So either we've got to relook at it, you might need to bring more money to the table. Again, that post liquidity, that's part of why we want to make sure that that's available. But something typically has to happen. So if you projected that your build out costs for your space were going to be $100,000 and they come in at $300,000, that the whole loan has to be reviewed and reworked to see if that's still a viable option, because your projections don't necessarily change. They might if it's a bigger space or also to include some inflationary growth, but it really comes down to a challenge for you. Do you want to continue? And if so, how much are you willing to put into this to move the project forward? And that would be our kind of that last big hurdle that we see as a challenge in closing the franchise loans.
Mm-hmm. Really good point. Moving on here, we'll talk about some pros and cons, weighing the benefits and considerations. Robin, if you want to touch base on these points, that'd be great.
Number one is always access to capital. I know it's number two on this, but we are not private equity money. You aren't giving up ownership in your business. You're partnering with a bank and with Benetrends and with a government-backed loan. And so the access to capital is at a reduced price to some of the market availability. The SBA allows for a long repayment term. Typically, it's up to 10 years for without a real estate purchase. It requires a lower down payment, typically, and no prepayment penalty if your loan is under 15 years. And we really are able to bridge collateral shortfalls. So when you're doing a loan and you're taking a look at what collateral do you have to pledge, it doesn't necessarily have to be dollar for dollar. When you're improving somebody else's space and a lease space, it's not like we're going to come rip down wallpaper and bathroom fixtures and things of that nature. We're paying for those costs to happen, but that's not collateral for the loan. Those really end up staying with the property as it moves forward into other lease obligations. So the SBA overcomes that and allows for those shortfalls. Do you want to talk about any of the other pros, Reg?
I think the only thing I'd like to add is that it reflects back on what you said earlier, Rob, about how the SBA is helping rebuild Main Street America. And that's exactly the spirit of an SBA loan. The SBA program was originally designed after World War II to help rebuild Main Street America. And the spirit and theme of the program remains consistent from its original beginning. I think, that's just an overarching positive evaluation of SBA loans. But I think that you did a great job, Robin, hitting on the key points.
I would also go through, I would tell you there are no cons to an SBA loan. That it's
none whatsoever.
There's a reality that it is a stringent qualification. We talked about the paperwork, government-backed loan, being precise, having your P's and Q's and all together. It can lead to a little bit longer approval timelines. Each bank is different. Being the largest SBA lender as far as units through 2022, we work really hard to keep our approval timelines and closing timelines down. The other piece is collateral and personal guarantee. You'll notice bridging collateral shortfalls is a pro. On the con side is we do require a personal guarantee, and you potentially would need to pledge any personal real estate outside of the state of Texas that has sufficient equity in it if your loan amount is, say, above the $500,000 small loan requirement of the SBA. Each bank is different. Each bank will require collateral in a different manner based on their do as you do, based on their credit policies. So collateral and personal guarantee are definitely something that you should talk to with your lending partners upfront to know what you are signing up for personally, because it is a somewhat of a bank by bank decision there. Personal guarantees are required for anyone over 20%. And collateral, if the loan is over $500,000, definitely personal collateral with sufficient equity in it is pledged. Under 500,000, it really is bank policy.
Perfect. Enhancing your brand's financing strategy, expertise in SBA loan processing. One of the things that I was going to mention about cons on this slide, and I held back, but I'll go ahead and mention it now. The SBA really gets a bad rap more times than not, and I think that it's because of different experiences that different people have had that haven't been so great. But I think that reflects back on when somebody has tried to get a loan at their local bank and have really struggled in the journey and not known exactly what to do or how to do it or how to answer the questions. And even in some cases, having done this as long as I have experienced lenders who are not savvy. They don't understand the SBA program like they should. And that's usually on the first line, the first person you're talking to in a bank. Sometimes they just don't have all the information that they need. So it's very important to work with a partner, be it a company like Benetrends, like us, or working directly with the bank, that you have a partner who's going to hold your hand and walk you through the process. We're here to make this an easy transition, or as easy as possible as it can be, to overcome hurdles that sometimes we just take care of that you don't even know about. So having a great partner to hold your hand through this journey is going to make things so much better.
And I would also make sure that you ask your lending partner if they have PLP or preferred lender status with the SBA. That can move your process through faster. Otherwise, once the loan is approved at the bank, it then goes through a process of approval called GP or general practice process, where it's going through an SBA due diligence process. So it can definitely speed up your loan process if you're working with a preferred lender of the SBA.
And that's usually pretty easy to find out. If a bank is a PLP or preferred lending partner, they're going to advertise that. They're proud of that because it's taken time to earn that designation from the SBA. It's not something the SBA just awards because somebody asked. In fact, you have to go through a process of earning that. When you don't have a designation at all, you have to move into a certified lending partner status, and then you can become a PLP. So Robin, that's a real good point, is to make sure you're always partnering with the PLP lender.
Or understand if you're with a non-PLP lender that you are working through their process through the general partnership process. So that's fine, but it could potentially increase the time to close your loan.
Right. Anything else you want to add here on this?
I think we're good.
Okay. All right. So I think we're coming to a close here. We're at about 37 minutes. Imagine that, Robin and Reg running overtime. But some information here about Benetrends Financial. You see our website here, www.benetrends.com. My email address is here, rbyrd@benetrends.com. Would love to answer any questions that you have, be here to facilitate your process and make your dream a reality. And then we have the fancy QR codes. I finally stopped calling them barcodes. These are QR codes. So if you're able to scan these, you'll have our direct contact information. And we're open for any questions, but we might have run over a little bit too much. Lauren, what are your thoughts?
I think
a couple minutes if we have any questions in the chat box. I'm not seeing any that have come in so far.
No questions. Wow.
Or so.
Well, I certainly hope today's presentation was helpful. We don't want people to be scared of the SBA loan process. There are a lot of hoops you have to jump through, but having the right partner really makes a difference. So definitely lean on us, please.
I thought I saw one question. There's lots of thank yous, which I appreciate. And but was there one question that rolled through quickly? I think it started with, did you mention?
Yes, I'm seeing one from Kenny. Did you mention something about ability to buy a home while having an outstanding SBA loan?
We did not. That is potentially possible because that home then gets a little more complicated in the answer. But if you have a home and you want to buy a house and you're in an SBA loan, it'll depend on if there's a lien on the current residence or not before you transfer to the new residence. If you have an SBA loan and you go buy a house after your SBA loan, that house would not be subject to any clawback, so to speak, from your SBA loan.
Right. I mean, an SBA loan is generally 10-year term, a 10-year term for lease space. Of course, if commercial real estate is involved, then the term goes out as far as 25 years. But in a common lease space loan, 10-year term, life happens during 10 years. And if you decide sometime during that 10-year period you want to buy a house, the bank is certainly not going to stop you from doing that.
Correct.
I hope that answered the question.
Great, thank you. It looks like we have one more. Michelle said, I had hoped to hear more about how the rules changed with the loss of the franchise list, specifically what resources are left to franchisors that lost that streamlining path.
That is a great question, and
Mhm.
about that. So the franchise directory, the SBA stopped maintaining it May 11th. Most banks are still using the old registry for and asking for a certificate of no change to the current franchisor. If a franchisor was not on the SBA approved list ahead of May 11th, it is a bank-to-bank decision on how they are moving forward with making a loan to that franchisor and validating that that franchisor meets the SBA requirements. So it's difficult to say the total impact of that because each bank is making their own rules or decisions on how they're moving forward with the franchise list.
Yeah, the only thing I have to add to that really is that we're placing loans with banks who find it okay with certain brands that have not been on the registry or the directory and are okay with doing the loans. There are other banks, however, that require that the brand still was on the directory, the SBA directory before the SBA pulled it. So, it's just really a matter, once again, it's a matter of having the bank relationships, knowing what bank will do what. And that's something that having the pool of lenders available like we do, we're able to make things work for brands that are not even on the registry or maybe never have been.
Great.
And then something to add to that real quick, sorry, is that some banks are actually hiring in-house attorneys to manage that process. So we should see that helping in the months to come.
Great. Well, thank you both so much. It looks like those are all the questions for today. So thank you so much again to Reg and Robin. This was excellent content and excellent feedback from all of you. We really do appreciate it. Again, this webinar was recorded and along with the presentation deck will appear on our website early this evening. You'll be able to find that at community.franchise.org. Thank you very much again to Robin, Reg, and the Benetrends team. And again, thank you to everyone for tuning in. Have a great rest of your day. Stay safe and healthy. Bye.
Thank you, Lauren.